Yo, what is going on, guys? Welcome back to Delta Rules. In today's video, I got some unusual options activity for you. Like I said, guys, I'm gonna be trying to teach you something new in every video, in every unusual options activity video that I come up with. Now, note the information presented by Delta Rules and myself are for educational purposes only. Trading stocks and options involve risk and are not suitable for all investors. You must do your own due diligence, always. Now, the first stock we're going to be looking at is going to be AAL, that is American Airlines. Now, there has been quite a bit of a hype as far as to this whole after COVID recovery idea. Now I'm seeing I'm seeing that reflected on the option chain. This is a very both sides, both ways option chain. There is a lot of people that think that is all hype. There is a lot of people that think that it's not all hype. There's a lot of people that think that the hype will continue. Not only that the hype will continue, but that the price will keep going up regardless of the situation. Now, like I told you guys yesterday, today's option statistics, whenever you pull up the stock in the trade section, the option statistics is very important because this pretty much lets you know where the market is at. Now, we could see that 824,000 calls were traded today and 245,000 puts were traded today. That already lets me know that there are more calls traded than puts traded. Now, the multiplier, which pretty much what that means, the multiplier for the calls is 3.3. So 3.3 times the calls that have been traded in the previous days have been traded today, as well as the puts. The calls is also higher than the puts. That also lets me know that people are mostly going for the calls in this situation. Now, looking at this, I usually like to look at the traded at, ask, or above, because that lets me know if people are buying it, what percent of people are buying that are this options, for the calls or the puts. We could see that 36% of the calls are being bought at the ask price, which is usually a bought option in this situation, and this is 36% for the puts, which is usually 36% of the people or of this contracts were actually purchased at the ask or above, which means that they were actually long. They're actually long this contract, which means they're purchased this contract. So if they bought a call, they think it's going to go up. If they bought a put, they think it's going to go down. Now, in this situation, I also like looking at the option time and sales, and there were a lot of calls traded today, as you can see there. I usually like looking at this by quantity. Now, this is pretty much, and like I said, there's a lot of mix. There's puts bought. This might have been part of this order. This looks like it might have been a little bit of a spread in there. It does look like there's more put buying, and there's a lot of call buying. I was going through this option chain, and there's a lot of call buying for short dated options and long-term dated options. So let's see for March and February. We're gonna take a look at this. Let's see, sorted by quantity. Oh God, sorted by quantity. It looks like, let's see, looks like mostly calls traded. It does look like a lot of buying in this situation. As you can see here, these are expensive contracts, as you can see as well. So it does look like there's a lot of call buying in this situation. So looking at the option chain, I would say I am in the call buying side of things. And this is pretty much what I want, what I want you guys to take into account. Also look at the actual chain, like the actual next week expiration. You can see that this volume has been very high. This volume is actually not reflected on the option chains, but the volume for today was a little higher than it looks like was reflected there. Not exactly sure why, but it was very high volume for today. If you look at the March, these are weeklies. These are usually a little bit more expensive because of volatility. But if you look at these, there was also volume in here. Not too much as far as like the monthlies go. Let me see. You see this monthly at the money. That is high volume compared to the open interest. Usually we like to look at this. If the volume is significantly higher than the open interest, then this is most likely it's liquid, and this, it's something that's being traded back and forth, and we usually like to look at this volume, because if that volume is there, that means that somebody with a big order came through, and that is, that is usually what we like to look at when it comes down to unusual options activity. And another one I wanted to look at was the AMC. And this is pretty much the movie stock, pretty much playing on the whole recovery as well. I really like AMC. I really like what's been happening on this option chains. If you come over here to the 26th of February expiration date, you could see that there's a lot of volume on this compared to the open interest. It's just, yeah, it's a lot. If you come over to the weeklies, you could tell there's a lot of volume. Now, if we come down to the option, actually not the option time and so, I'll show you that right now, but to the option statistics, you'll notice that this is what we like to see. Traded at ask or above, 51%. So that means that 51% of the contracts were bought or traded at the ask or above. We could see that there was 1.1 million of them put in, to the 194,000 puts that they were that were traded. So definitely on this one, definitely on AMC. This one, I feel like this can definitely be a good trade, at least for the hype being. Definitely, I mean, ultimately, I definitely think AMC is a great company. I definitely think once we are back to normal, it will definitely blow up. So if you do, this is definitely the time to get in and get a couple of shares. If you have the capital to be able to get a couple of shares, I'd rather get the shares than the options. The options, they're just a little expensive right now. You look at the volatility on each one of those options, 272, 219. Volatility is just very high. So if anything happens with AMC, let's say that the hype dies down for whatever the case may be, you can lose a lot of money on those options. And that's the main thing. Usually if you own the equity, it's less risky. I'd rather get 100 shares of stock at, $655 than, then again, this is kind of, I would definitely rather get $655 worth of shares than buy a call for $58. Because it's just, not too much time. I want to be able to, have some wiggle room there as far as the risk that I'm taking. So yeah, most definitely AMC. I'm really looking at this one. So that this is something to watch. Thank you for watching, guys. You guys have a wonderful day. Make sure to like and subscribe to the video if you like the videos that have been coming out. I will keep them coming. You guys have a wonderful day. Love you guys.